Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's top stories with you. We're starting off with a look at the latest developments in the ETF space. eShares has launched a new Prime Money Market ETF, ticker symbol PMMF, which offers intraday trading liquidity for money market fund-like investments. This is a unique twist on traditional money market funds, which typically operate with end-of-day NAV calculations. According to reports, PMF aims to provide high current income while maintaining liquidity and principal stability. The fund's holdings include bank deposits and tri-party repos, which introduces some counterparty credit risk. However, this is comparable to other short-term fixed-income ETFs like Bill and T-Flow. What's interesting about PMEF is its compliance with CSC Rule 2A7, which sets guidelines for money market funds. This could make it an attractive option for investors seeking liquidity and yield in a low-interest rate environment. On the other hand, we're also seeing some shifts in the emerging market space. The eShares MCI, Emerging Markets ex-China ETF, has experienced record outflows as investors flock back to China-focused funds. This comes after a period of significant growth for MX China strategies, driven by concerns over US-China tensions and trade wars. As always, it's essential to approach these developments with a nuanced perspective. While some investors may be bullish on China's prospects, others may still be wary of the risks associated with investing in the region. We'll continue to monitor these trends and provide you with expert analysis and insights to help you navigate the complex world of stocks and finance. Whether you're a seasoned investor or just starting out, our goal is to empower you with the knowledge you need to make informed decisions about your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest market trends and insights. Today, we're discussing the recent developments in the Indian stock market, and I've got some fascinating stories to share with you. First off, let's talk about the rupee. According to a report from the Economic Times, the Indian currency has been experiencing some volatility, with the rupee falling to a new low against the US dollar. This has sparked concerns among investors and businesses alike, as a weak rupee can make imports more expensive and impact the country's trade deficit. But what does this mean for the average investor? Well, experts say that a weak rupee can actually be beneficial for certain sectors, such as exports and it. In fact, a recent interview with Rohit Srivastava, a market expert, highlighted the potential for sector rotation in the Indian stock market. He noted that while some sectors like NBFCs, SUS, and metals have been performing well, others like it may be due for a comeback. Srivastava also pointed out that the recent correction in the market has created opportunities for investors to pick up quality stocks at attractive valuation. He identified 4 leading sectors that are likely to continue performing well: commodities, SUS, financials, and oil and gas. However, he also cautioned that investors should be prepared for some volatility in the short term. Now, I know what you're thinking. What about the impact of global events on the Indian stock market? Well, as we all know, the global economy is increasingly interconnected, and events in one part of the world can have a ripple effect on markets elsewhere. So, it's essential for investors to stay informed and adapt to changing circumstances. In conclusion, while there are certainly challenges facing the Indian stock market, there are also opportunities for growth and investment. As always, it's crucial to approach the market with a clear head, a well-diversified portfolio, and a long-term perspective. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. I'm your host, Louis, And we're here to break down the latest market news and trends. As we wrap up today's show, let's dive into some of the top stories that caught our attention. First off, we have Cathie Wood's ARK Invest making headlines again with their bold bets on innovative companies. But what does this mean for the broader market? We'll take a closer look at the potential implications of their investment strategies and how they might impact your portfolio. Next up, we're seeing some interesting developments in the world of cryptocurrency. With prices fluctuating wildly, it's essential to separate the signal from the noise. We'll explore the latest trends and what they might mean for investors looking to get in on the action. Now let's talk about the economy. The latest consumer confidence numbers are out, and they're not exactly painting a rosy picture. With concerns about inflation, tariffs, and recession risk, it's no wonder investors are feeling cautious. We'll break down the data and what it might mean for your investment strategy. We also have some updates on the trade front, with President Trump's latest comments on reciprocal tariffs sending ripples through the markets. How will this affect global trade, and what does it mean for your portfolio? We'll give you our take on the situation. In other news, Tesla's stock has been on a wild ride lately, with some analysts predicting big things for the company. But is this a sign of things to come, or just a flash in the pan? We'll examine the fundamentals and what they might mean for investors. Lastly, we have to talk about the ongoing rally in Chinese technology stocks. With some experts warning of a potential correction, it's essential to be cautious. We'll give you our thoughts on the situation and how to navigate these choppy waters. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.